All right, so welcome to the second day of the Forex workshop. This is a beginner's bootcamp. And yesterday we dealt with the fundamentals of Forex trading. We learned what Forex is. We learned about contract for differences. We learned about, currency pairs, the eight major currencies and the combination of the currencies which make up the currency pairs. We learned about pips, how to calculate pips, what a pip is. We learned about lot size, the different lot size categories, the micro lots, mini lots, standard lots. We also learned about the Forex trading sessions. We learned about candlestick anatomy. All right, we learned about Forex brokers, about the market participants. We learned about the ask and bid price, about spread. So a whole lot we learned about yesterday. So now what we want to do today is to build on what we've taught ourselves yesterday. And very, very importantly, today is going to be a practical class. And in order for you to engage, it makes sense to have. So yesterday I said that everybody needs to have created their demo account. So I'll just do a brief paraphrase of that. So what you want to do is to go to the website www.10trade.com. So that is to create an account with the Forex broker, www.10.trade rather. Okay, 10.trade. So let me share the screen and show you how that is. So when you go to 10.trade, you are going to get access to this website. So this is if you don't already have an account with 10trade. So what I need you to do in order to participate in this session is you must have your demo account running, so that as we are looking at trades and different aspects of placing a trade, you can also do the same thing as I am doing it. All right. So you want to quickly create an account. So you want to click on register. If you haven't, click on register, is free. So you want to fill this form, right? Once you are registered, it will take you 1 to 2 minutes to fill this form. Then automatically you'll be logged in. So let me just log in. So I'll log in here, and then you would have access to your dashboard, right? So the first thing you want to do is to, at the top here, you see open a demo account. All right. So once you open a demo account, click on demo MT5, right? Put in 1 to 100 currency, this, and then you click on continue. Once you do that, your login details will be given to you immediately. And then what you want to do, like we discussed yesterday about trading platforms. So we showed ourselves what MetaTrader 5 is. So once you create your demo account, you'll be given login details into MetaTrader 5. So MT5 is a trading platform that you can download onto your phone or onto your laptop, right? So this is how the laptop version of the MT5 look like, right? So you want to log into your demo account either on your PC, or you go to your App Store and then you download MetaTrader 5. It's a free platform, and then you log in with the details that 10trade has given to you. Okay, so all of that was what we said that we should do yesterday before we come for today's session. So I'll just keep all of that because of time. Now, the first thing that I want us to do today is to talk about the concept of stop loss and take profit. So let's start from the very basics of placing a trade. Let's start by talking about what a stop loss is, stop loss and take profit. Right? So when you hear stop loss and then when you hear take profit, what I want you to think about is exit points. Okay, exit points in the market, exit points, right? So this is where you want to exit a particular trade. Remember yesterday, we talked about the two activities that you'll be involved in as a Forex trader. What are those activities? You'll be involved in buying and selling. That's all you are doing. Just like the trader in the market selling tomatoes, right? You as a Forex trader, you are buying and selling currencies, okay? So how do you make money when you buy, as we have established yesterday? You make money when you buy at a very low. So you buy when price is low, somewhere here, and then as the price is going up, you are making profits, right? How do you make money when you sell? You sell at a very, very high price. If you sell high, as price is going all the way down, you are making your profits, right? So that is two activities that you'll be involved in doing. So the skill set that you need to learn is the skill set of knowing when and where to buy, and then when and where to sell, right? So we cannot adequately talk about buying and selling without talking about exit points, which is stop loss and take profits, right? So let's start from stop loss, right? Stop loss is an area of the market where you want to exit a trade in a loss. Now, let's isolate this buy scenario right here. Okay, let's isolate buy scenario right here. So we want to buy. So you bought here. Good. So this is a buy example. Let us label this correctly. So this is a buy. So you bought this particular currency pair in the hopes that it is going to gain value, start going up so that you can make your profit. Now, when you take entry on your MT5 platform, you'll be asked for your stop loss and take profit. And stop loss is your exit point. So when you click on buy now, and then possibly the trade is not going in your direction, okay? It is meant to go up as per your prediction, but it's going against you. And as it is going against you, like so, you are losing money. The capital in your platform is, depleting. So in order not to lose all of your capital, you need to stop the loss, right? So that's why we need a stop loss. So a stop loss is your exit point. So when price goes against you, the area of the market where you want to be taken out in a loss. So that price point is a stop loss, right? So MT5 would ask you for stop loss. And then on the flip side, when price starts going your direction, okay, we start talking about take profit. So take profit is also an exit point in the market where you want to exit a trade in profit. So take profit is more like your reward, your maximum reward on that particular trade. Stop loss is your maximum loss or risk on that particular trade, right? So when you set your take profits, okay, to be a price point above your entry, to be here. So these two terms, stop loss and take profit, helps you exit the market automatically. So when you enter a trade, you put your stop loss and your take profit, even if you are not online, even if your data is off or your phone is off, because you've set it beforehand, it has gone into the server of the Forex broker, okay? So as soon as price gets to any of these price points, you'll be automatically closed. You guys not hesitate from that particular trade. So this for a buy scenario. Now, for a sell scenario, now, when you are selling, you are anticipating that price is going to go all the way down, right? You want price to go down. So there are times that when you enter a trade, for example, is not going your way, it will most likely go against you. In order not to lose that trade, you need a stop loss, right? So when you set your stop loss, that's the price point where you want to stop the loss so that you can still preserve majority of your capital, okay? That's stop loss. And then when price starts going your direction, you need a take profit. So take profits is where you take profits. I think they're quite easy concepts. Stop loss, take profits. It's quite self-explanatory when you put it into the context of placing a trade. All right. So now let's talk about how to place a trade. Okay, so it's very, very simple. We are going to learn how to place a trade using the laptop, using the MT5 on your PC, and then MT5 on 100 as well. Okay, so let me try and load up give me a second. Let us load up MT5 on the phone and then start from there. So also, if you are still trying to log into your demo account, you can start doing that right away so that we meet in the middle. Okay, so let's start from the PC. How do you place a trade? So the next concept we're talking about is how do you place a buy or sell trade? Of course, the first thing you want to have is to have created an account with MT5. Hold on, guys. Give me a second. Okay, so the first thing you want to have is to have created an account with 10 trades. So this is a demo account on 10 trade. How do you place a buy or sell trade using the MT5 made for PC? It's very, very simple. You will see this option at the top here called new order. Okay, new order. So that is where you go to, and then you just go ahead and then you click on new order. So once you do that, a dialog box is going to pop up like so. And the symbol that you are trading is going to show here. You can, of course, also trade the symbols, change it as you wish to anyone. Okay. And then the type of placing a trade. We have two types of trade entries. Number one is market execution, and then the second one is pending order. So let us go back to this, and then let me explain the two types of trade entries that we have. All right, so let's talk about placing a trade real quick. All right, placing a trade. There are two types of entries that we have in the foreign exchange markets. All right, we have market execution. We have market execution, and then we have pending orders. So what is the difference between market execution and pending order is very, very simple. When you are taking a trade with market execution, what it means is that you are entering a trade at a later date. Okay, that is pending order. But for market execution, you are entering the trade immediately. Now, most of the time, you would always use market execution, but sometimes based on your strategy, it will require that you use a pending order. So if I see a trade entry on Euro USD, and then I want to use market execution, if I click on buy or sell, I will be quoted into the market immediately at the current market price. Okay, at current market price is where I'm going to enter the market. But if I want to use a pending order, right? Unlike being quoted into the market at current market price, for a pending order, I will be the one to set the price in which I want to enter the market. Okay, like either for a buy or for a sell. Now, how do you do that? There are different categories of pending orders that we have. Okay, so we have buy limit, we have buy limit, we have sell limit, we have buy stop, and then we have sell stop. Okay, so this will categorize these pending orders into two categories. So we have limit orders, and then we have stop orders. Okay, so we have limit orders, and then what do we have? We have stop orders. What do we mean when we say limit orders? What do we mean when we say stop orders? Now, limit orders are reversal orders. So our orders when you are anticipating price reversal. I'm going to explain this to you visually in a bit. So when you say limit orders, think about reversals. When we say stop orders, you want to think about continuation. Okay, so limit orders are reversal orders, while stop orders are continuation orders. So let's go ahead and talk about these different kind of pending orders, the buy limit, sell limit, and the likes real quick before we go into real practicals, right? So let's talk about what is a buy limit and what is a sell. So let's start with buy limit and sell limit. Okay, now this is how I learned it, and I think it's going to be useful for you as well, so that you don't just cram it, right? You can really understand it and use it for yourself. So buy limits, remember, limit orders are reversal orders, and a limit order that is a buy. So that means you want to buy the reversal. So if you say buy limit, you want to buy the reversal. So what is the scenario where you can use a buy limit? Is when you have price. So we have price like so, price is going up like so, and then maybe is now coming all the way down. Okay, so price is selling. You now want to enter a buy that will cause a reversal. So for a buy limit, for you to use a buy limit, price needs to be coming down like so, and you can set a pending order. Remember, for a pending order, you will be the one to set the price in which you want to enter. In this case, you want to enter for a buy. Okay, so for a limit order, price needs to be coming down. So if you want to enter here, for example, you set a limit order here using this price point. So this is 1.50565, such that when you set this pending order, this buy limit, like so, as soon as price touches this price here, you will be automatically quoted into the market for a buy. Okay, you can see that's why we say limit orders are reversal. Okay, so price was coming down like so, because possibly based on your analysis, you feel that price is going to reverse at this point. So you enter for a buy. On the flip side, sell limit is just the direct opposite. So let's say you have price going down like so, okay, and then there's some sort of a retracement. And based on your analysis, you think that price is going to reverse here. So you set a sell limit, right, that will initiate a reversal. So price is going up like so. You want to enter a reversal entry. That's why I use sell limit. So when you set this pending order on your MT5 with this price point, that is 1.52824. As soon as price gets into this zone, what happens? Immediately you will be quoted into the market for a sell. Okay. So this is buy limit, and then this is a sell limit order. Right? Let's talk about buy stop and sell stop. Okay. Now, one of the usefulness of, give me a second, one of the usefulness of using pending orders is that there are times that you'll be very, very busy with work, or maybe you don't have time to actually maybe seek trades, right? And then you really want to set your orders and get back to work, right? At those scenarios, pending orders come in really, really handy. Okay. So stop orders are continuation orders. So you want to buy or sell the continuation. So in this case, let's start with buy stop. So let's say for your buy stop, you see price going up like so. Okay, price is going up. And then based on your analysis, you think that price, that this bullish momentum is very strong. Is very strong. So you want to look for a buy scenario at somewhere around this price. So maybe you think that if price gets here, the momentum is still going to be very, very strong. So you can set a buy stop. So that means you don't have to be physically present at the time at which price is going to get to this zone, but you can set it automatically. Okay, you can set it automatically. So when you set a buy stop over here, as soon as price gets into this point here, automatically you'll be quoted into the market for a buy. Okay, that's why stop orders are continuation orders, like we discussed. Okay, they are continuation orders. On the flip side, what do we mean when we say price is in a sell stop? Okay. All right, so let's go. Sell stop. Sell stop is a continuation order for a sell. So let's say you have a trade that is going down like so. Okay. And based on your analysis, you've seen a very huge sell momentum. And then you still feel that this is still going to drop a whole lot. So over here, you set an order here so that if price gets to this zone here, this price here, you want to be inputted into the market for a sell. You want to sell the continuation. That's where sell stop comes to play. So as soon as price touches this price, immediately what happens? You'll be quoted into the market for a sell, right? It's as simple as that.
Recording in progress.
Let me know if you understand this concept. If you understand, please type in yes. If you don't, please type in no. Okay. Give me some feedback in the chat box. Let me know if we are on the same page. Yes. Awesome. Good. So If you don't understand it, please feel free to let me know. So we have 2 responses so far. So yes, so 3 responses, good. So let's go straight into MT5. So this is our MT5 platform, and then we're on the Euro USD chart. So we want to place a trade now. And when you click on new order, like so, this dialog box is going to come up, right? You would also see something similar on your MT5. So possibly after this would also do for mobile phone, but this is what you see if you are trading on your PC, right? So you have the symbol here, then over here type, they'll ask you, do you want to use a market execution or pending order? So that means, do you want to enter the market instantly, or you want to set the price at which you want to enter the market? But let's start with market execution. So if you're a total beginner, I'll recommend that as I'm doing this as well, you can also open the chart on your own computer or your phone and try and enter a trade, right? Since it's a demo, right? It's not real money. But when you do it as I'm doing it, it makes it more realistic and easy for you. Okay, so let's select market execution. And then once you do that, the next thing that you see is the volume. So the volume in this case refers to the lot size. So which lot size do you want to use? At the end of this class, we will talk about the concept of risk management. So risk management, if it's in place, is what will let you know the right lot size that you should be using for your account size, right? So somebody trading an account of $1,000 will use a different lot size than somebody trading an account of $10,000. So it depends on your account capital. It depends also how conservative or aggressive you want to be. So let's use a mini lot, for example, of 0.55. That's a mini lot size, okay? Then you also be asked for your stop loss and your take profit. So we already discussed what a stop loss is and what the take profit is, all right? So you have 2 options. You can either decide to put your stop loss or take profit before you place the trade, or you can use stop loss. You can put the stop loss and take profit after you've placed the trade. So you can modify your trades at any point in time. Okay, so and then leave this as default. Then the next thing is sell or buy. Okay, so let's just click on buy. Good. So when you click on buy, immediately, as you can see, you see the running trades on your terminal here. Okay, you see how much you are making or how much you are losing, right? Okay, so when you are in a loss, you see it as red. When you are in a profit, you see it as blue. Let me make this bigger real quick. Good. So when it is red, you're in a loss. When it is blue, you are in profit. Okay. So let's enter another entry. Let's enter a buy, a sell rather. Good. Now you see it's very, very fast. Good. So for a sell, we are in profit. All right. Now let's enter a pending order. Let's go to the 30 minutes chart. Let's go to 30 minutes. So this is the 30 minutes chart. Let us enter a buy stop and a sell stop for this particular trade. So let's see how it works. So right now, we can see that price is going up like so. All right, you can see price momentum. So based on your analysis, so we are just doing this without any analysis. I'm just showing you how it works. So don't just go to a currency pair and because you are seeing green candles, you start buying. No, you don't buy because there are different green candles showing like so. You blow your account that way. So this is just for example, explanation purposes only. So let's assume that we've done our analysis and then we think that this bullish momentum here is going to continue. So what you can do is over here, let's say at this top here, we can set a stop order, okay, a buy stop order, so that when price gets into this price zone, we want to be automatically entered into the market for a buy. That means we want to enter the continuation of that move. Okay, that's what the buy stop is used for, to enter the continuation of the move. So the price is 1.06419. Interesting price. So you're going to go to new order, select the symbol. Now on that type, now you now click on pending order. So when you click on pending order, you see another option, type. So this type, you see buy limit, sell limit, buy stop, and then sell stop. So for this case, we are using buy stop. Okay. So when you click on buy stop, next thing is your volume, which is your lot size. So put your lot size and then price. So that is a price point that you set for your buy stop. So in our case this is 1.06419. Okay, you put your stop loss. So in this case, your stop loss will be below the entry, and then your take profit will be above the entry. And then you click on place. So you can see, as soon as you do that, the trade is triggered here like so. Okay, it's not ready yet because price has not gotten to that zone yet. So as soon as price gets here, we will be automatically triggered into the market. It's as simple as that. On the flip side, let's do a sell stop. Okay, these are quite easy concepts that will come in handy when we start talking about strategies and entries. Now, this will be a lot clearer to you, but what I want you to do now is just to try your best to understand the concept of, pending orders. It comes in handy a whole lot as you mature in your trading journey, right? So let's say type pending order. Now, we want to use, let's do sell stop first. So sell stop. Now, for a sell stop, what are you anticipating? So let's say, price is currently going up now. So based on your analysis, you think that there's going to be a retracement like so. And then maybe you think that when price gets somewhere here, let me use a red line. When price gets somewhere here, there will be a strong sell momentum. Okay, there'll be a strong sell momentum. So you want to enter the continuation of the move for a sell, but you want to take your entry here. So you can set your entry price. That's the beauty of pending order. So that is 1.05988. So new order, right? So select your sell stop. You want to put your lot size, right? And then the price, that's the price of your sell stop. That's the price where you want to enter for a sell. In our case, that is 1.05988. 0.05988, right? Your stop loss value, your TP value, you put it there, and then you click on place, right? ASAP, your trade is waiting for you over here. Okay. Now let's do a sell limit, for example. Okay, so, and then one thing is, even after you place a trade, before a trade gets to your stop loss or take profit, you can manually close a trade. And then you can also modify a trade. So let's start by modification. So let's say you enter this trade. This is a running trade now. Okay. When you click on it, when you right click, you see the option close position, modify or delete. So if you click on modify, right, you can change the stop loss, you can change the take profit. All right. So it's not like a static value. You can change it to whatever you want to change it to at any point in time, right? And they can also close. To close it, just click on this X sign to close, right? That's how it's done. So let's do a sell limit example. So give me a second. So a sell limit example is we want to enter the trade for a reversal. So price right now is going up like so. So you've done your analysis and then you think that you are seeing weakness in this area, and then you feel that price is going to start dropping very soon, right? And then you have done your top-down analysis, right? Friends, I didn't see what you did to close the trade. Okay, don't worry, I'll draw it down for you. So just pay close attention, right? So we want to enter for a sell limit, a reversal. So let's say you are waiting for price to get to this red line. When price gets here, you want to be entered into the market for a sell. Okay, that's a reversal entry because before price is going up into the zone, and then you want to enter for a reversal. So how do you do that? Come to new order, type pending order, select your sell limit, right? Put your lot size, put your price. So which price do you want to enter for a sell? In this case, a sell limit at the top. So that is 1.06530. You want to put your stop loss. So let's just select a random stop loss. So our stop loss can be, so if we are selling, that means if we are selling, that means you want price to go down, right? What it means that your stop loss is going to be above. Okay, let's make that properties. Let's change that to yellow. Stop loss yellow. Okay, and then your take profit. Let's say this is where you want to exit the market in profit. Let's change that to white. Okay, good. So let's go back to our order. So your stop loss 1.06822, and then your TP, that's take profit 1.05379. You click on place. Once you do that, immediately your pending order, okay, has entered the server, right? So as soon as price hits this price here, you'll be automatically entered into market for a sell. Okay. Again, you can modify the trade at any point in time to change your stop loss or to change your entry price if you've not been triggered yet. So to do that, just right click on it to modify. You see modify or delete. To click on it, right? If you want to modify, just modify the price, stop loss, TP, right? Prince, if you want to delete, you can just click on this delete button here to delete. You can see, so the trade has been removed. So that's one way that you can delete. You can also delete by, coming over here. You will see a small X button here. Okay. For that's Prince. Can you see? You see this X button to delete. When you click on it, that will close the running trade. So that's how you can delete. So you have two ways that you can delete a trade, right? Is it clear? Let me know if you are with me. Give me some feedback in the chat box before we go to the next concept. So we'll start talking about market structure, support and resistance after this. But let me be clear that, yes, please ask a question, Prince. Let me quickly unmute you so you ask a question. Prince, unmute yourself and then ask a question.
All right. Good evening, sir.
Yes, good evening.
Yeah, please, I want to know, after you've deleted the trade, does it affect your capital? Like if that trade was running on profit or loss, when you delete the trade, does it affect your capital?
Yes. So when you delete a trade, that is you closing the trade. So you will close it at whatever price you are in profit or a loss. So if you're in profit of $5, that means your capital plus that $5. If you're in a loss of $5, that's your capital minus $5.
Okay, thank you so much.
Yes, sir. Welcome. Okay, good. So we've dealt with all of that. Now, let's talk about the next concept real quick. Let's go into analysis, okay? So, how do you analyze? Let's talk about concepts of support and resistance real quick. Let's talk about support and resistance. Okay, so in talking about this concept, my goal for you today, especially if you are just getting to hear this for the first time, is to give you a general knowledge and understanding of support and resistance. Okay, so because we are just introduced to this concept, I will not go so deep into this concept, also because we are pressed for time. So I would like to give you a solid foundation as to what support is and then how to use it, how to spot support and resistance in the market to use it to your advantage. Okay, so when we are talking about support and resistance, what I want you to think about is market structure. Okay, think about market structure of the market structure. And I want you to also think about reversal zones in the market. Okay. Reversal zones in the market or areas of reversal. Okay. So support and resistance are zones in the market where we see reversal activity. So let's start from the first one. What is support? Let's start from support. When we say support, what are we talking about? Now, when we think about support, I want you to think about support as a floor, right? Just the way you're probably sitting on the floor right now. Your legs are on the floor right now. All right. If you jump up and then you jump down, most likely the floor is going to support you. So you cannot really go beyond the floor, except you use a very, very huge force to kick it, and then you maybe break the floor, okay, if it's not strong enough, or if you are very, very strong. All right. Likewise, in the Forex market, there is a zone in the market that acts as a floor, and that zone is a support. Okay, such that whenever we see price coming down like so, and then when price gets into a support area, you usually see a reversal. You cannot miss it. It's very, very visible. Okay, so price is changing direction. Okay, what caused price to change direction is the support area. Okay, so when we are dealing with support and resistance, I also want you to think about it this way, that support and resistance is using historical data to predict what will happen in the future, using what has happened in the past to predict what will happen in the future. Okay, it's just like saying that, for example, the upcoming elections in Nigeria. Okay, PDP wants to enter the market, wants to enter the role, likewise APC. Now, one thing that most Nigerians will use to judge these candidates are the antecedent or the precedent, right? What they've done before, okay? So if they've done this before in the past, most likely in the future, they are likely to also do the same thing. In the market, support, right? When you draw a support zone, it is what has happened in the past. So you look at the market and then you spot a zone in the market where you see reversal, like so, where a support is acting as a floor, okay, and it's causing a reversal. So you are highlighting it because of the future, so that if in the future price should come back here, because in the past we experienced a reversal. So most likely, if price should come back to this zone again, we are most likely to also see the same reversal. Okay, so support and resistance, is not a trading strategy. It's not the only thing that you will look at to buy or sell, but it's a start. Okay, it's a good place to start from. All right, so support and resistance helps you to know areas or zones where you should be buying and selling. Right, so you will be applying a trading strategy in a support zone or a resistance zone. Okay, so we are simply using past data, that's what has happened in the past, to predict what happened in the future. Now we've seen this, that price touched this place, reverse, price touches place again, reversed. So we've seen 2 touches now in this support zone. So most likely, we might say to ourselves that, okay, this zone is strong. Maybe if price should come back into this zone again, because previously this zone seems to be strong, because the last 2 times that price came here, we saw a reversal. So most likely, if price will come back here again, we can be looking for another buy opportunity. All right. Now, because an area acted as a support before in the past, does not mean that it cannot be broken. Right? So a support zone can be broken to the downside. So that is why we just don't buy at support. Okay, so but general knowledge is, if we know that a support zone is an area of the market that acts as a floor and then kicks off a bullish momentum, that means in a support zone is where you want to be buying. So we buy at support. Don't worry, we'll look at the chart in a bit, but know that when you identify a good support zone, you want to buy in a support. You want to buy in a support. And then on the flip side, let's talk about resistance. Right? So resistance is an area of the market that acts as a ceiling. Resistance. Okay. Think about it as a ceiling, just like the ceiling over your head right now. If you throw your phone up, most likely it's going to come back down. Okay. Except that ceiling is not strong enough, or your phone is made of, krypton or something very, very strong. Okay. So a resistance zone in market, when price is, you have a bullish momentum like so, and then all of a sudden price gets to a particular area, and then you see a retracement, you see reversal. Okay, what caused the reversal is that price has gotten to a resistance. So there's a resistance, okay, and that resistance made price go, made price reverse. It's as simple as that. So this is past data. It would have happened in the past. So you, as a trader that is smart, you want to use historical data to predict the future, possible prediction of the future. So if this has happened in the past, then most likely we might have the same thing happen again. So possibly if price should come back up here again, we might possibly also see another resistance occur, another reversal in this zone. Okay, so we've had one touch here, second touch here. Okay, so if you see 2 touches, for example, it's an indication that, a zone is very, very strong, and most likely you should consider it. So if you have something like this, you might be waiting for price to also, if price will come back into this zone, it might be a good zone to look for sell opportunities, right? So we buy at resistance, and I beg your pardon, we buy at support, and then we sell at resistance. Hope I'm communicating, guys. Okay. We buy at support and then we sell at resistance. Okay. Again, support and resistance are not standalone trading strategies, right? You just don't identify a support level and then start buying. You just don't identify a resistance zone and then you start buying. You need to add further confirmations to a support zone before you buy. You need to add further confirmations to a resistance zone before you sell. Okay, but generally, you want to be buying in a support and selling in a resistance, right? It might not be always advisable to buy at resistance. It might not be always advisable to sell at support. But in order to be on the good side, a lot of times you want to buy at support and then you want to sell at resistance, okay? Give me some feedback in the chat box before we move further into the chart now. Let me know if you understand this concept before we go to the live market. Just type in a yes in the chat box if you understand, or a no in the chat box if you don't understand. It's clear. Yes, Mr. Prince. Good. Awesome. Awesome. Good. So let's identify areas of support and resistance on the chart. So let me go to forward chart. Okay, so now what I would like you to do is, thankfully, today is Friday, tomorrow the weekend starts proper. I'd like you to take the time this weekend to, get familiar with support and resistance. And what you want to do is to learn how to mark out those zones, how to identify it, how to spot it, and see exactly how they play out, okay, in the market. Like I was telling you yesterday, these blue, green, and red candles, this is your bread and butter. This is what you'll be doing as a Forex trader. This is your business, right? So you need a lot of screen time to be able to properly interpret what is going on, right? There is no amount of mentorship, no amount of training that can take away your own personal investment into looking at the screen, right? So because you get to a point in your trading career that everything will just click to just start aligning for you, because you've spent enough time looking at how candlesticks interact, looking at how they operate. It is at that moment that you can properly interpret what is going on in the market. All right. So don't always shy away from studying the charts. And the mark of a true trader is at least every weekend, you want to devote at least 2 to 3 hours studying the charts, because this is the mark, this is your business, right? Spend time on your business trying to understand what's going on. You are also back testing your trading strategy, which is giving you some level of confidence, and then you are learning from it. Okay, so enough of my preaching. Let's go to identifying support and resistance first. So let's start from areas of support. So I'm just going to identify them at random. So let me start from the current market price. Mr. Amani is asking, please, where do you normally post the recorded videos? Okay, so 10 Trade has a YouTube channel. I recommend that you, I don't know where you got the link to the to this webinar from, but there's a group where there's a 10 trade community group on Telegram and then on WhatsApp. You can just reach out to the admin. They usually post the link to the recorded sessions. So you get it there. You can also get the link to the YouTube channel on that group as well. But I would ensure that everybody that attended tonight is sent a copy of the recorded session. All right, so you'll be contacted within this week. Okay, okay, good. So I'll request that they should be posted. All right, by today or tomorrow. I believe you should get it, or just reach out to your account officer and then ask for the recording. Okay, is that clear, Manuel? So let's go. We want to identify this. So let's assume that. So let me replay this here, for example. So over here, how do you draw support zones? Remember, a support is an area of the market that acts as a floor, and then there are areas of reversal, isn't it? Looking at this area here, we can see activity of support. You can see price coming down like so, and then we see this reversal. That means something was responsible for pushing price up. Okay, that is a support. So how do you draw support? How do I draw support? My recommendation in drawing a support is to consider support as a zone. So a support is not a price. It's not a price like one line like this. No, a support is a zone. So my recommendation to draw a support is the last, so before the up move happened, before, give me a second. So before the up move happened, like so, what is the last sell candle before the up move, from the beginning to the end? Okay, that entire zone is the support. So from here, so I usually use a rectangle tool. So this trading platform is called TradingView. So it's very easy to use TradingView, and it's also a free platform. So you can create a free account on TradingView. You can also do this same thing as well on your MT5. So it's just based on preference. Okay. So let me just do this real quick. So like I said, so for this particular example now, this is the highest point on this candle, right? And then this is the lowest, like so. So what I do is very, very simple. I just simply use a rectangle. Okay, and then I mark it out. You can see. So what can we see playing out here? We can see that when price came down here, we saw a retracement, a reversal like so. Okay, and then price came back down here again. We saw another reversal. So we've seen two touches. Okay, so what it means is that possibly if price should retrace back into the zone, okay, we can also see another reversal. And then I think price did that. When price came back into the zone, let's play it forward. When price came back, you can see price touched the zone. Can we see price reversing? Good. Okay, you can see price going up from here. Okay, so 3 touches. If price should come back here again, can we see another bullish move. Let's see. So let's play this forward and see what price is doing. You can see. So price did 4 touches here, okay, before going all the way up. So this support zone is actually a very, very valid support area. So we will be buying buying at support. Okay. Akumi Idris is asking, what are the time frames we should consider when drawing the zones? We are not talking about that yet, right? We are just trying to understand what support is. When we start talking about strategy, how to use a support and resistance, we'll start dealing with time frames. But now we want to start by focusing on understanding what support is and what resistance is. Okay. So, like I said from the beginning, I'm just giving us a general understanding of what support is. And my goal for you this weekend is I need everybody here, especially if we are just getting started, to be able to identify a support and a resistance. Okay, that is the goal, right? So let's see another example of a support. So let's rewind this over here. So what can we see over here? We can see activity of reversal here. So price came down like so, and then started going up, right? This is the support zone. You can draw it out like so, right? We've seen multiple touches here, right? This is the first one, second one, okay? About, let's just say 2 touches here so far. So that means if price should come back here again, let's drop that. So if price should come back here again, possibly we might see a reversal again, okay? But like I told you, it's not guaranteed. A support zone can be broken, right? Good. So let's play this forward and see what's going to happen. So price is coming back down. If price gets into that zone, is it going to hold on? Okay. So we can be generous and make the support zone a bit bigger because of this cluster here. So let's say price, you know, touched a bit into this and then push price up. Okay. Let's see if price should come back down into the zone. Is it going to hold? So let's play that forward. Good. So price touched that zone. We saw a tiny little bit of action here, but ultimately that zone got broken, right? So you will see this a lot in the market. A support zone will get broken, right? A whole lot, right? But what a support level would give you perspective, it will give you perspective of possible zones where you should be looking to buy. It's very, very important. I'm taking my time because a lot of traders are still trading support and resistance wrongly, okay? Support and resistance still work. They work, but there's a right way to do this and there's a wrong way to do this. But we might not be able to build on support and resistance if you don't have a solid foundation of how these concepts work. So please just bear with me. I'm taking it as slow as possible because I want you to understand this concept. All right. So ultimately, what did price do? Okay, so once price has broken this support, Okay, so that means that support invalid. We can see another support here. You can see as price came down like so. Okay, you can see the reversal. So that means there's something responsible for that reversal. Okay, so let's play that forward. Ultimately, at the second touch, third touch, we can see that price moved. You can see at this touch, second touch, okay, we have a validation here. Price came back into the zone. At the third time, you can see that the zone was a good zone to buy. Okay, so identifying a support zone is identifying reversal zones in the market. And then if you want to validate a support zone, usually you want to look spots at least 2 touches. So 2 touches in a support zone will usually validate a support or a resistance. So at the third touch or at the fourth touch is where you want to be looking to take entries at those zones. Okay, so, and then you see this play out if you go all the way back. All right, so because of time, we cannot really go into everything. All right, you can see, you see support zones that worked, you see zones that did not work. You can see this support zone right here. Okay, it worked for this trade, right? This support zone right here. Okay, ultimately it was broken, price tapped back, we push price up. Okay, this support zone right here, okay, the support zone right here, it worked. Okay, so you see valid support zones, and then you see invalid support zones. Okay, so we want to start spotting that. A natural question would now occur to you: how do we spot valid supports? How do I know valid support zones to use to take entries? How do I know valid resistance zones to take entries? Okay, eventually we are going to get there. Okay, but I need you to take it to do it step by step. To just for no reason this weekend, I need you to get familiar with the concept of support. Right? So let's jump to the next concept, which is a concept of resistance. Okay, so support, we've seen how it works. Okay, is a zone that acts as a floor, right? So when we look at resistance, is a zone that acts as a ceiling. So let me play this back for you. Oops, this is back for you. So let's say here. So let's use this. We can see price going up like so, right? And then coming back down. We are seeing a reversal. Okay, so what that means is that there's a resistance in this area. If you draw it out, this is the last green candle before the drop, right? So that's a zone. So you've seen one touch, two touches here. So possibly, can we see a third touch? If price should come back here again, are we going to see activity or resistance? So let's play this forward in a second. Okay, so this times 10. So let's play this forward and see what's going to happen. Good. So we can see a third touch here. You can see when price came here, we are seeing activity of the sellers here of selling happening. Ultimately, you can see that resistance zone acted as a zone where we can enter for a sell, right? So because price has not broken the resistance zone yet, that means it's still kind of valid. So if price still gets here, can we still look for sell opportunities, right? So let's play forward. So ultimately, what can we see? We saw a little retracement here. Okay, price a bit going above the support, above the resistance rather, but ultimately the resistance held. Okay, so as we progress in our knowledge, you start learning about something called stop hunting and liquidity grabs. But I don't want to load us with too much information right now. So let's take it step by step. Okay, so let's look for another resistance. Okay, another resistance. So let's play this forward. Let's see if price still came back here in a second. Let's play it back. So price came back there another time. So this support zone actually held so much. It's very, very strong. Okay, it held a lot. Okay, so that means there is a lot of vested interest in this zone to drop here. Okay, so that means the US is weak and then the CAD is strong. So let's look for another resistance area. Let's look at this one here. There's a replay. Let's use this. So over here, what do we see? We see price coming down like so, and then we see a tiny little bit of reversal here. Okay, that's support, I beg your pardon. So we have price going like this, price going up like this, right? And then we are seeing a retracement like so. That means there's something over here that push price back down, right? So let's mark that. So the last buy candle, okay? So we're in a support, we're in a resistance zone. So let's see what's going to happen in this zone. Okay. If price broke below the zone like so. And then when price came back into this resistance zone, okay, we saw that price went up a bit. Okay, did the stop hunting, but eventually the resistance zone held and then pushed price all the way down. All right. So once you're able to spot resistance, spot support, that is pretty much your step one. Okay. It is at support zones you now start looking for buy opportunities. You would have some sort of checklist as your strategy requires. When you spot a resistance zone, is the first step. In a zone that's a resistance zone is when you now start looking for sell opportunities. So you have a lot of confluence, okay, that will help you take the best trading decisions. Okay, so let us go ahead. Let's spot one more resistance zone and then we'll move along. Oops, sorry. Good. So let's spot a very good resistance zone and then we'll go. Good. So we have this happening here. Let's just spot a random. We have, so this is a resistance zone like so. Okay, because what's happened here is over here, price came up like so, ultimately pushed price down. So there's activity or resistance here. So if we draw that out, second time price came here, we saw a small drop, third time, small drop, fourth time, drop, fifth time, drop. Okay, sixth time, the price came here, drop. All right, you can see how activity of resistance and support is very, very important. Very, very important. So most of the time, a lot of people are able to spot resistance zones and support zones correctly, but the issue now lies with the entry. So people take entries at the wrong price. Okay, so with time, we are going to do all of that. Every Monday and Wednesday, 10 Trade organizes, we have live trading sessions every Mondays and Wednesday, whereby we are going to be analyzing the live market, and then we will be spotting profitable zones where we should be trading together. So when you attend those sessions, you will be able to understand what we're talking about properly and know exactly the best zones to buy or sell. So guys, your first assignment for this weekend is go to any currency pair, any chart, any time frame, and just start marking out, drawing out your resistance zones, draw out your support zones, right? You want to see how support zone is active, how it's moving price, how a resistance zone is moving price. You want to be able to spot, how a zone is valid or a zone is invalid. Okay, so it's very important that you do this exercise, right? Only those that do this exercise are going to grow, right? I know that especially for people that are seeing this for the first time, it might look very, very abstract to you. Okay, we've all been there. But like I said, I spoke about screen time earlier. As you spend more time looking at the charts, it will start making sense to you. You can literally interpret what's going on. You can look at the chart and then explain exactly why price is doing this and that. Okay, so assignment 1, you want to, this weekend, spend time, go on any time frame, any currency pair, and start marking out support and resistance zones. Okay, for a beginner, that is your bread and butter, because in a resistance zone is a zone where you'll be looking to sell. In a support zone is a zone where you're looking to buy. And those are the two major activities that you'll be doing as a Forex trader, is buying and selling. So if you cannot identify a support zone or identify a resistance zone, then you'll be making a lot of mistakes. Okay, give me some feedback, guys, again in the chat box. Let me know if you understand the concept of support and resistance. Please type in a yes or a no if you understand it. If you understand, type in a yes. If you don't understand, type in a no. And then we'll move forward to the next concept. Prince said yes. Awesome. Okay, Chuku said yes. Who else understands it? Okay. Awesome. So let's move forward then. Now, let us talk briefly. Let's talk briefly about the concept of trends. Let's talk about trends in the market. Okay, market trends. Okay, so trends is also still under market structure, just like support and resistance is also market structure. Likewise, we have something called trends. Okay, now trends simply talks about the direction of price. So what direction is price doing? Okay, so we have two kinds of trend, right? We have the uptrend we have the uptrend, and then we have the downtrend. We have the uptrend, and then we have the downtrend. So an uptrend is when we are seeing bullish momentum in price. Okay, uptrend is so bullish momentum. I'll show you in the market shortly. Bullish momentum. Is my spelling correct? Is it momentum? I'm not sure. So don't bear with me. We have bullish momentum in price, while for a downtrend, we have a bearish momentum. So when you say that price is bullish, that means it's in an uptrend. When price is bearish, it's in a downtrend, bearish. Bulls and bears. Remember, we talked about that a lot yesterday, okay? This is the two major trends that the markets will make. So it's either price is going up. How does an uptrend look like? It looks something like this. When price is ranging up like this, it's going up. That means price is bullish, right? It's gaining strength. This is an uptrend, okay? When price is going down, like so, it's ranging down, it's losing momentum, we say price is in a downtrend or price is bearish, okay? So these are the two major trends that we have in the financial market. And regardless of the markets, right, market structure is the same across board. So if you are looking at the Forex market or the stock market or the crypto market, you will always see trends. You would also always see support resistance, right? Market structure is foundational for every financial market, even those that trade the synthetic markets as well. Okay, good. So now that you have a general knowledge of what trend is, now let's go a bit deeper into trends. Okay, let's go a bit deeper into trends. So let's start with an uptrend. How does a trend really look like when we break it down into the moves? So for an uptrend that looks like so a trend looks like this. You have an impulse move, you have a correction, and then you have the impulse. Okay, so this is a trend in its basic form, right? So in this case, this is an uptrend. Give me a second. It's an uptrend. So this first move up here is called the impulse. It's called the impulse move. Impulse. Okay, and then the move coming down is called the correction. It's called the correction, the corrective move, correction, or you can say retracement, or you can say pullback. In manuals, yes, you can have a question. So let me quickly unmute you so you ask your question. So unmute yourself, Emmanuel, and ask your question.
All right, thanks. Sorry, I do not pick the name. Thank you. You're really doing a good job. Okay, so I just want to ask this question so that it doesn't bring about confusion.
Okay.
What's the percentage, the correction? Because me looking at, I know this is actually just for the purpose of explanation and then for this class, laying the foundation.
Yes.
But so that one doesn't misquote it or accept this foundational knowledge. what is the percentage a correction should look like? Because ordinarily, looking at this impulse and this correction of the pullback, you can see this has gone beyond like almost 75% of the impulse itself.
Yes.
All right. What is the percentage of what a correction or a pullback should look like for a trend that for it out to be sustained, or for one to feel whether the trend will continue, or how many of it one should have for one to actually believe that, okay, this is actually a sustained trend?
Okay. So it's a very good question. It's also a faulty question, because that is why a lot of retail traders lose money, because we are trying to make price reverse at a particular zone. So I would assume that you are referring to Fibonacci retracement. Okay, so at what point will price retrace to? Most people would say you wait for price to retrace to the golden zone, which is between the 50% and 61.8. Some will wait for price to hit the 73.6, right? But all of that is good, but is not standalone, is not complete. Why it's not complete to expect price to retrace to a particular zone is because, first of all, what we are using to analyze the markets is based on technicals, okay? And technicals, for a number of reasons, is less than 10% of what we should really look at. What moves the market majorly is the fundamentals, is raw supply and demand. Okay, what is happening in the economies of these currencies? Okay, the best thing that we can do when we are looking at technicals like so, and determining when to expect this retracement to end, so that you can take entry, is to, over here now, for people that are just beginning, just bear with me. I'll be done with Mr. Manuel in a bit, so that don't let me confuse you. So, Mr. Manuel, so when you are trying to anticipate the right place where this should stop, so that you take an entry, right? So we want to assume that maybe you are looking at this retracement now on a higher time frame. Let's say the 4 hours time frame, for example. Now, there's something called swing structure. There's something called internal structure, right? So on this retracement now, let me quickly digress. So you have this price going like this, and then retracement. Like so, this retracement on a lower time frame, so like the 15-minute time frame, it will look like this. It will look like this, something like this. So how you know when it's going to end is when you see this trend shifts from bearish to bullish. So you like to wait for price to break the zone to give you a signal that, okay, it has violated this lower high. All right, so you'll be looking for buys at the retracement, or you wait for the trend to print, then you wait for price to retrace, and there you go. All right, so there is no correct zone to look at. This can happen over here. It can happen at the 50% or at the extreme. What really matters is the market structure that price is printing at the lower time frame. So once a level of structure is violated, is a signal for you to start looking for possible entries. Is that clear, Mr. Manuel?
Yes, very, very. Thank you.
Awesome. So, but please, do your best to join the weekly sessions. We have trainings every Mondays and Wednesday. So I really go deep into this concept. Okay, so I'll be able to give you more context on Mondays and Wednesdays. Okay, so now the second step in a trend is the correction, and you can also call it a retracement, or you can also call it a pullback. All right, and the third move is another impulse move. Okay, so a trend is made up of impulse, correction, and impulse. Right? So in this case now, if the uptrend wants to continue, you now see another correction. Oops, where is my? You see another correction, impulse, correction, impulse. Okay. In the case of a downtrend, it's like this. You see impulse, correction, impulse, correction, impulse, like that, like that, like that. Okay. So now let's go a bit deeper into this trend. So when we say something like this, when we say we have an impulse move, a correction, and then impulse. Now, we can label each of these starting points and reversal areas. So in an uptrend, this place, okay, is called the higher low, okay, HL. So this starting point is a higher low over here. This next one, this extreme, is the higher high, which is HH. Okay. Higher high. And the end of the correction is the next higher low, right? And the impulse is the next higher high. Okay, so an uptrend is a trend whereby you see higher highs being constantly created. So if we see price retrace now, like so, to form a higher low, okay, for this trend to continue being in an uptrend, okay, price needs to break this previous higher high, okay, to form a new high. Okay, so in an uptrend, you find that new highs are being created in an uptrend. Okay, so new highs are being created in an uptrend. Okay, on the flip side, in a downtrend, new lows are being created in a downtrend. So in a downtrend, we have this impulse, correction, impulse. Now, what does this mean when we start labeling these points? This place is, okay, lower high, and then over here you have lower low. Oops, let's label that LL. But you will need to be labeling it once you mark it up on your charts, but it makes sense that you understand what's going on with price so that you can really interpret the market effectively. So lower high. So then this is lower high, this is lower low. Good. So in a downtrend, you find out that lower lows are constantly created. So if you get a correction like so, that would be the new lower high. If that triggers, if we create a new lower low, that means the downtrend, okay, is still in play because lower low is being constantly created. Okay, so in an uptrend, so why are we bothering ourselves with trying to figure out the trend? It's very, very simple, because we want to be on the side of market structure. Okay, so basically, very, very simple. In an uptrend like so, it is safer that if you are able to identify that price is in an uptrend, when you look at the structure of the market, and then you identify that price is in an uptrend, like so, you are seeing higher highs being created, it is safer to look for buys. You are looking for opportunity to buy in an uptrend. Okay? You are looking for buy opportunities in an uptrend, and then you are looking for those buy opportunities at where? At support. Remember, remember that we talked about a support being a reversal zone in the market that acts as a floor. And then what do we do in a support zone? We buy, right, in a support. Now we are adding an extra confluence to that understanding. So you'll be looking for support zones in an uptrend, okay, for you to buy. So you are buying, it is recommended to buy in an uptrend, and in an uptrend, you want to look for support zones in an uptrend whereby you'll be buying. Because if price is in an uptrend, that means it's going to be creating higher lows, like so. So you want to find, what's it called? A support zone, okay, where price reversed, okay, which might possibly coincide with the higher low. And then at this support area is where you want to be looking for buys. Okay, over here, I'm buying at support. You buy at support in an uptrend. Okay, don't worry, we'll still talk more about that much later. You buy in an uptrend at support, and in a downtrend, because the momentum of price is bearish, you want to be on the side of this volume, right? It's recommended that in a downtrend, you should look for sells, because that is where the strength of the market is. You have active sellers in the market. So you want to spot areas of resistance, okay, in a downtrend where you can sell. Remember, we sell at resistance, okay? So you want to spot resistance zones in the market in a downtrend where you can sell. So you wait for price to retrace, to correct into a resistance zone, and then at these zones now, you will look for sell opportunities. Okay, so we sell at resistance in a downtrend. You sell at resistance, so that resistance in a downtrend. Give me some feedback, guys, in the chat box. Let me know if this is clear. I'm trying to make it as simple as possible. Obviously, it won't be as simple when we start doing analysis, but once you have the general understanding, okay, we can adjust to anything that happens. Please type in a yes or no in the chat box if you understand what I've explained so far about trend, uptrend, downtrend, lower lows and lower highs, higher and lower lows. Please give me some feedback in the chat box. Let me know if I'm carrying you along. Prince, you raise your hand. Do you want to ask a question? If you want to ask a question, just type in, just let me know in the chat box and I'll just unmute you, okay? Okay, let me start with Prince. I can see Manuel. So Prince, unmute yourself, Prince, and ask your question.
All right, thank you, sir.
Yes.
So please, my question is, after you've marked all these highs and lows, when, like, if you're a day trader, it's advisable you start marking your trades from what's it, the 4-hour time frame, right?
Go ahead.
Then
Are you
once you've
okay?
once you've done this, where do you take your trade? Is it in the lower time frame or in that 4 hours time frame?
In a lower time frame.
Okay, sir.
Lower time frame. So it's very, very important that you do multi-time frame analysis. It's called top-down analysis. If you mark a zone on the higher time frame, okay, so to get a very good entry, you need to take entry on a lower time frame, like the 5 minutes or 15 minutes.
Okay, sir.
Yeah.
Can I use what you just did here as an example, like in the left-hand side of your screen?
Okay.
Let's say from the lower high to the lower low, and then there was an up move to, and then it created another lower high. Now,
Yeah.
let's say this is a 4-hour time frame.
Yes.
When it's about to come down to create a lower low, in the lower time frame, I think it should be a how will I put it, a place for an entry.
Yes. Over here.
Yes.
Yes.
Then
So go ahead.
Go ahead, sir. I'm hearing you.
No, go ahead. So over
Okay,
here
so
is where you look for entry on a lower time frame.
okay. Then when it's about to create another lower high, we'll exit from the market in the lower time frame.
Exactly.
Okay.
Exactly. Okay. Thank you. So Mr. Manuel, unmute yourself and ask your question. Emmanuel, you can unmute yourself now and ask your question.
I thought I was already unmuted. Can you hear me?
Yes, loud and clear.
Okay, all right. So I said I was just going to ask to find out if your liquidity lectures are available on 10 Trade YouTube channel.
Yes, because we have been doing weekly sessions in the last few weeks, every Mondays and Wednesdays. So once you just reach out to your account officer or anybody in 10 Trade Nigeria to give you access to the recordings. We still had one recording last Wednesday. That's 2 days ago. So you see everything.
Yeah, I was in that class. So that's one of the reasons I was asking. But
okay.
Are you the only person that takes the classes, and what's the name, or the other facilitators?
Okay, so right now, for these weekly sessions, I'm the only one taking it, but we have a team of people coming on board that will be taking different aspects every week. Okay.
Okay.
Yeah.
Then do 10 Trade do deposit bonuses?
Yes. So right now we are giving people 50% deposit bonus on first bonus, and if you are funding anytime after that, you
But not withdrawable.
Is withdrawable if you trade up to, there's a lot size condition for you to be able to withdraw the bonus. But if you don't want to meet those conditions, it's fine. There's no restrictions on withdrawing the profits or withdrawing your capital.
Okay.
Yeah.
But there is also a leverage condition, right?
No.
Margin condition, sorry.
No,
The bonus.
there isn't. So
There is none. Oh,
if
okay.
you lose, so let's say you deposit $1,000, you
Okay.
get $500 as bonus. So that means you have 1,500. Okay,
Yeah.
so the maximum that you can lose on that account is your capital, which is
Okay.
1,000.
I think
Which
it's applicable everywhere. Yeah, it's okay.
Exactly, which is reasonable. Yeah.
Thank you.
Yes, welcome. Okay, so let us move forward. Accumulating interest, yes, the minimum deposit on 10 trade is that should be $10 minimum. $10 minimum. And there's no cap on the maximum. Okay. So let's move forward. So yes, I'll recommend, because I can sense that Mr. Manuel, Mr. Akumi, Idris, Prince are already trading, which is very, very interesting. Thank you for taking the patience to join this class. But I'll recommend that you also take time to join our weekly analysis sessions, because that will offer you more value. Okay, and then you can actually ask me pertinent questions, and then I'll be live to really go deep. But your questions, because we also have people that are just getting started on this Zoom call, I won't be able to go deep into answering your major questions. Okay, good. So guys, so remember, very, very important, your first assignment this weekend is I need you to spot support and resistance zones by yourself. You want to devote at least 1 hour to 2 hours this weekend. So tomorrow, devote 1 hour, Sunday, devote another 1 hour. Okay, you are just spotting support and resistance zones alone. The second thing that you're spotting are these trends. Okay, so let me quickly, so let's spot trends in the markets now. Okay, so let's spot trends in the markets right now. So let's start with a downtrend. So you can see over here, our price is moving. Okay, we have impulse, correction, impulse, correction, impulse, correction, impulse. Okay, ultimately correction, and then impulse. So that's a downtrend. In an uptrend, you can see price giving us is creating new highs, like so. Impulse, correction, impulse, correction, impulse, correction, impulse, correction. Okay, so I need you to also take time out and spot this. I need to be able to spot uptrends and downtrends in the market. And then also, you must understand that price will move from uptrend to downtrend. So if a price is on an uptrend, like so, it will not, most of the time, it will not keep going up for life. At a point in time, price is going to switch to a downtrend. Okay, so you also want to note the points whereby price shifted from an uptrend to a downtrend, and from a downtrend to an uptrend, like so. Okay, like so. So let me digress, or let's go deeper. I want us to be done with this class in the next 30 minutes, but I'd like to show you something. And a lot of people usually don't understand this concept. And I think it's also be beneficial to people that are already trading. Okay, so how do you know that an uptrend has finished printing? And how do you know that a downtrend is now in play? So let's quickly do that. Okay, understanding structure is very, very important in your journey. So we have an uptrend like so, impulse, correction, impulse. So price is creating new highs, higher highs like so. Okay. The first signal that you'll be given to inform you about a possibility of the trend shifting from uptrend to a downtrend is if any of these structural areas have been broken, this higher low. Once you are seeing that higher lows are being broken, and then by being broken, I mean that price has broken this zone like so, okay? That's a signal that possibly you're about to see a reversal. Because truly, standard or truly, if an uptrend will continue, it should not break the higher low. It should at least be at par with it, and then continue like so. But when you see that price has broken this zone, is your signal that, okay, possibly we're about to see a correction that will bring about the lower low. Okay, so a scenario that happens a lot is something like this. So when people see something like this happen in the market, let me give you an important scenario. So price can do this. Okay, so when people see this, for example, okay, they will think that price is in a downtrend, even though price is giving you higher lows, lower lows and lower highs. But ultimately, this is the higher low that needs to be broken. All of this that is happening here, we call them internal structures. I don't want to get too technical. I think I'll just keep this lesson for next class. These are internal structures, right? And then all of these structures here, these ones are swing structures. Swing structure. Okay, so our example about the trend, where is it? All of this, these are swing structures. The higher lows, lower highs, and likes, they are swing structures. Okay, but we also have something called internal structure. Let me go back there. Guys, pardon me. I think I've gone to another place. So give me a second, guys. Okay, good. So I'm here. So I was saying all of that to explain this concept right here, that we have swing structure and then we have internal structure over here. When you are considering trend change, you are considering the swing structure. Okay, This right here is a swing structure over here. This is a swing low, this is a swing high. So for this trend to change from an uptrend like so to a downtrend, it is this higher low that needs to be broken for you to consider that price is shifting momentum. But there are times that when price wants to retrace into this zone, it might also form internal structures. Okay, but it does not mean that price has shifted to downtrend, because people will think that because this is printing, price is now in a downtrend. Okay, if you are considering internal structure and then not considering the swing structure, okay, you'll be lost most of the time. All right, so it is until price breaks this zone, like so. Okay, that is your signal that price wants to shift from uptrend to a downtrend. And then what do you wait for? You wait for price to retrace into a higher low, a lower high, then price will form a lower low. Okay, so this is now an established downtrend. And then what do you start doing? You start looking for sell opportunities at a resistance area, like so. I don't know if that makes sense. Okay, let me do for a buy scenario real quick. So when we have price going down like so, impulse move, correction, impulse. So these are swing structures. Swing structures. Okay. For this downtrend like so, the signal that this downtrend wants to come to an end is that this lower high, remember our labeling, this is a lower high, right? This lower high needs to be taken out. That's your first signal. So when price is doing this, okay, we are still very much in a downtrend, even though this internal structure is giving you structure of an uptrend. It's correct, but it's an internal structure. Okay, so you cannot consider this an uptrend because the swing structure is very much still a downtrend. Okay, so that means this lower high still stands, still valid. So that means even though the internal structure is giving you a bullish momentum, possibly if price gets here, it will still go down. But if you don't understand this, you might just keep buying and think that price is bullish. Meanwhile, you are just a part of a retracement. Okay, so to get the big picture, you need to put into perspective the swing structure. Okay, so the only reason, so the first signal is that if price will shift from bearish to bullish, price needs to break this level of structure here. In this case, this lower high. Once that break happens, you want to wait for the retracement into a support area and then for price to form a higher high. Once that happens, price is now in a verified uptrend. The trend has fully shifted to an uptrend like this. So you now wait for price to retrace to correct into a support zone. Okay, you now start buying at support. Does that make sense? Okay, you have a question. Let me unmute you real quick. So we have to be out of here in the next 10 minutes. Yes, please unmute yourself and ask a question.
Okay, what's the name, please? I love to address people by the names.
Okay, my name is Toby.
Okay, Toby, thank you very much. You're doing a great work. Okay,
Yeah.
So I was just going to ask that this technicality is just shared, which is very, very eye-opening. But I was just going to ask, which time frame would you actually advise this be used as a confirmation, a valid confirmation in this case? Because there are cases whereby these scenarios will actually apply on a lower time frame, but it's not applicable on a higher time frame, and yet there will still be a continuation in trend.
Can you rephrase the question?
Okay, so now you're saying that for us to actually get a validation that a trend is about to change, or a
Okay.
pattern print of a trend is about to change, you
Yeah.
need to look out for a push, right,
Yes.
above either a resistance or a support, depending on which trend it is now, and then a retracement back
Yes.
to either a support or a resistance, and then you expect that a higher level being formed. Let's say if it was actually a lower a bearish trend, now you will expect that a higher print into breaking the previous resistance now be
Yeah.
formed, so as for you to confirm that okay, the pattern or the trend is about to change. So I'm saying, which time frame would you say one should actually look at? Though I understand your top to bottom pattern of
Yes.
analysis,
Yes.
all right, but for me to actually make a confirmation, which time frame would you expect that I look out for? Because it's possible that I could actually have this kind of pattern in a lower time frame, but it's not valid in a higher time frame. And since you're actually teaching a top to bottom analysis, okay,
Okay.
which time frame would you say should be used as a valid confirmation or trend change when you are looking at this type of confirmation?
All right, so I think okay, thank you so much. I get your question. So how I will answer this is very, very simple. You have to figure out, are you a swing trader? Are you an intraday trader? Or are you a scalper? Okay, so that will be what will determine your higher time frame. For some people, their higher time frame is the 1 hour time frame. For some people, their higher time frame is the 4 hour time frame. For some, their higher time frame is a daily or weekly. Okay, so let me give you a particular example. Let me show you how I spot my trades most of the time. Okay, so my higher time frame. So I look for this swing structure on my higher time frame, which is the 4 hours. Okay, and then I take entry most of the time on the 1 minute.
Wow.
Yes.
1 minute?
Yes. So I have a middle time frame, 15 minutes.
Okay.
So I don't want to go deep into it, so that's why I'm skipping some steps, but this is how I look at it. For some people, their own higher time frame can be, okay, the 1 hour, and then they take entry on a lower time frame, which can be 5 minutes. Okay, now why this works is because the market is fractal. Also, guys, this weekend, understand what is called the fractal nature of the market. The fractal nature of the market. Okay, so because market structure is the same across every time frame, so what will happen on H4 will also happen on H1. Okay, so the market is fractal. So it is you that will decide the time frame that you want to trade. Do you want to start from the daily chart? It's fine, no issues. Do you want to start from 30 minutes? It's fine, no issues, as long as you are following market structure. If you are trading according to market structure, okay. Now this particular retracement now, okay, let me just double check this particular move, this internal structure, for example, okay, on a lower time frame, it is swing structure. Okay, and this retracement on a lower time frame, okay, is a swing structure. All right, price is moving. So that's why I said the market is fractal. So you will choose the time frame that you deem fit, where you want to be taking perspective from. I don't know if that clarifies it for you.
Yeah.
So there's no ideal time frame to use, but you just need to look at the market systematically. All right. So you must have a time frame at which you have affinity for as higher time frame. So if I'm looking at 4 hours as my higher time frame, I do this. If I'm looking at daily as my higher time frame, what I do is, so daily, okay, I go ahead to do further analysis on 30 minutes, and then I take entry on 2 minutes. Okay, I like going three time frames deep, but for some people, they just do two time frames. It's fine. Okay, so it depends on your trading strategy and your trading system. Is that clear,
Thank
sir?
you.
Yes.
Yeah, very, very. Thank you.
Awesome. So, guys, let's talk about the last concept for today, which is risk management, and then we'll call it a night. So, risk management is very, very simple. So, I'll just talk about an aspect of risk management because our time is fast spent. I'll talk about the lot size that you should use based on your account capital. Remember that when you are about placing a trade on MT5, you'll be asked for your lots, either a micro lot or a mini lot or a standard lot. So if you don't understand the lot size that you should use, if you have an account size of, let's say, $100, you might be tempted to use a standard lot. And maybe you use a very good leverage, you might actually be put into a trade. But if you use a standard lot on a small account, like $100 account, you are risking so much, so that if you are in a little drawdown on one trade, you can lose the whole of your account. And nobody likes losing money. So that you can be in the industry for long, in the game for long, you need to have proper risk management in place. So I'll talk about the most basic and the first concept of risk management that you need to have under the card, which is determining the lot size that you should be using per trade. Okay, and then how do we do that? It's very, very simple. Let me share my browser. Right, we are going to be using a tool called the position size calculator. Okay, position size. So you want to go to Google and then search position size calculator. This tool will help you determine the lot size that you should be using based on your account size. All right. So is the first thing that you see here is a link by my FX book. So let's click on it real quick. Okay. So once you do that, you'll be brought to this page here. Now, as a beginner, when you are thinking about risk management, my recommendation for you is start by being a conservative trader. Start conservative. Once you are now very good, you can now proceed to being aggressive. By conservative, I mean you want to be risking a maximum of 5% of your account per trade. What I mean by risking that amount is, so let's say you are funding your account with $1,000. if you are risking 5% per trade, that means if that trade does not go your way, if it goes against you, you will only lose 5% of your account, which is $50. All right. That means the only way that you will totally blow your account and lose all your capital is if you lose 20 trades consecutively. But even the poorest trader, or like the one that can't trade, I've not seen anybody that has a trading strategy that can lose. That's a trading strategy, and then they follow that strategy, and then they lose 20 trades consecutively. It just does not happen that way. So the major reason why people lose money is, number one, they don't have a risk management plan in place. The majority are risking so much per trade, and then they are just plain greedy. So lesson one under risk management, you want to risk a maximum of 5% per trade on your account. All right. So if you are doing that, how do you know the lot size that you should be using in order to risk 5% per trade? All right. So this calculator will give you access to those information. So you'll be asked for your currency pair. So that's the currency pair that you want to trade. All right. So remember to use the right currency pair, because they have different dollar value per lot, right? So if you are using Euro USD, you put it there. Account currency USD, put it there. Account size, this is how much that is in your trading account. So let's say $1,000. Okay, so risk ratio talks about your maximum risk per trade. And then we said you want to risk a maximum of 5% per trade. So let's say you use 5, or let's say you use 3%, for example. So anywhere between 1 and 5% is fine. Next one is your stop loss in pips. So what is the value of your stop loss in pips? So you measure from your entry point to where your stop loss is. That's a pip value. So if it's 10 pips, so let's say 10 pips. Then you go ahead, you leave the trade size as 1, leave it as default. Then you click on calculate. All right, so you see the lot size here. So if you risk 3% on these accounts with these trading parameters, this 10 pip stop loss, the lot size that you should use on that trade is 0.3. So that if that trade does not go your way, you will only lose $30 from $100. Okay, so this helps you know the right lot size to use. It keeps your risk in check. Okay, if your risk is higher to like 5%, okay, that means your lot size would also increase. You can see that increased to 0.5, right? If your stop loss pips is lower or higher, it also changes. So let's say your stop loss is 30 pips. When you click on calculate, you can see now you should use 0.17. So personally, I always use this. I still used it yesterday that I took a trade. All right, but so that you won't waste time doing this, before you take entry on a trade, you want to have an idea as to, you know, the lot that you should use, so that you quickly enter a trade. All right, so I recommend it greatly. Don't enter a trade without knowing how much you are risking. Okay, consistent traders always consider stop loss first before take profit. Okay, an average trader that is still blowing accounts is only thinking about take profit. okay, and they're not considering stop loss. If you want to have longevity trading, right, you need to have your risk like at A game, like you need to have good risk management. And this that I'm talking about is just is the least ranking risk management. So as we go along, we should talk about other risk management strategies, but you need to have this in check. This is where you should start from. Risk 5% max, maximum on your trade using this calculator. All right, guys. So my recommendation is please get the recording to this session, right? And please watch the recording, do the assignments. The second assignment that you should do for beginners is you want to identify trends. Okay, identify trends and how trends are changing. As you can see, price was coming up like this. Okay, ultimately, okay, this higher low was broken. Okay, retracement, this, okay, resistance, price reacting at resistance in a downtrend. Okay, I'm going. So you want to what's it called? Say this weekend, identify support zones, resistance zones, identify trends as well. It's very, 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 very important. And then once you do that, you'll be able to better interpret these candlesticks and market direction with great detail. Okay, guys. Any questions? Let's take the last question for tonight, if any questions. And then I recommend that you join our advanced session every Mondays and Wednesday. Okay, it will be posted on the group on WhatsApp and Telegram. All right. So please, if you have any questions, feel free to reach out to your account officer or send an email to Central Support. We'll do our best to give you answers. So Central is not only trying to give you a platform to trade, we also want you to be a profitable trader, which is why we are having these beginner sessions and weekly live trading sessions as well, so that you can be trading consistently. All right. So guys, thanks so much for being a part of this webinar. I wish you all the very best in the trading journey. And we are here for you, 10 Trade, if you need any support. Okay. Let's have a remarkable weekend. I'll see us next week. Bye-bye, guys. Cheers.